Hi everyone, and welcome to the Cannabis Tax Resolution Minicast. The topics we cover on this minicast are related to IRS and state tax audits, resolving state and IRS tax debt, and topics around unfiled tax returns. We will also discuss the latest in any tax news that will affect your business both positively and negatively, including a sprinkle of tax planning strategies that will save you money and keep you out of tax trouble. My name is Desiree Anderson, and this is a mini-cast that tackles a single topic in a bite-sized format. Each cast lasts no longer than 3 to 15 minutes. Today's topic is titled, What to Expect When the IRS is Auditing You or Your Business. Now, when the IRS decides to audit you or your business, they are looking for two things. One, did you report all of your income? And two, were you entitled to the credits, exemptions, and deductions that you claimed? As we all know, if your business is in the cannabis space, you're not allowed credits, exemptions, or regular deductions. You are, however, allowed to reduce your gross income by cost of goods sales. So during the audit of a cannabis business, the auditor will check to make sure that you didn't violate 280E by deducting ordinary and necessary expenses, and they will also comb through your cost of goods sold transactions to make sure that you didn't hide any ordinary and necessary expenses inside of cost of goods sold. Also, FYI, the IRS allows cannabis businesses to deduct additional items inside of cost of goods sold if the company maintains their books on a GAAP basis. So it's to the benefit of your business if you hire an accountant familiar with with cannabis tax and accounting if you want to reduce your tax liability. Now, the cannabis industry is considered by the IRS to be a cash-intensive business. A cash-intensive business, according to the IRS's definition, is one that receives a significant amount of receipts in cash. An example of cash-intensive businesses are restaurants, grocery stores, hair salons, and any other type of business where customers tend to pay cash for products and for services. Now, the cannabis industry falls into the definition of a cash-intense business, not because of the nature of the business, but because selling weed is illegal on a federal level, and therefore there is a lack of access to banking. Now, the IRS is fully aware that cash-intensive businesses don't report all of their income, and they know it's hard to trace cash that was never deposited into a bank account. So they have certain procedures that they use when auditing cash-intensive businesses. Now, what makes the cannabis industry even more unique and challenging to the IRS during an audit is the concept of vertical integration. Now, businesses that are set up this way can be a little bit more challenging to audit. That said, an audit may start with one of the businesses, but by the end, all of the integrated businesses may end up being pulled into the audit. So that's something to look out for. The IRS will pay special attention to an entity set up as a management company. Okay, so if you have integrations and one of the integrated businesses is a management company, they're going to pay special attention to that. They'll be looking to see if expenses are being funneled through the management company as a way to beat 280E. Now, the IRS audits cash-intensive businesses a little bit differently than they would non-cash intensive businesses. So here are a few things to expect if your business is ever under an IRS audit. One of the first things the auditor does is to review the return being audited to identify potential issues and collect data needed to plan the audit. Expect the auditor to interview you or someone in the accounting department about the business's cash collection processes. The auditor will want to walk through the books and records so that they can gain an understanding of the process for receiving and recording payments from customers. This information will help them later during the audit when they are reconciling your paper or electronic documents to gross income on your tax return. Now, if you use a cash register, they will pull data from the register tape to make the comparison. If you don't use a cash register, they'll request your sales invoices and also your sales receipts. Now, the IRS knows that even if a business is cash intensive, they always keep records of the cash that comes into the business. How else is the business going to make sure that the workers aren't lining their own pockets? Because it's easy to do that when you're collecting nothing but cash. So even if your business doesn't keep good records, the assumption is that there are procedures in place when collecting cash from customers. The IRS is also known to interview employees of the business for additional information. Now, the use of comparative analysis and ratio analysis is a tool that may be used during the audit. When using this method, the auditor is looking for trends between the relationship of income and expenses. Now, this relationship should be consistent over time, and the consistency of such a relationship can be evaluated by using comparative analysis between 3 or more years of tax returns. Now, industry benchmarks are another tool the IRS uses to make a determination of whether a business is reporting all of its income. However, because the sale of cannabis is still illegal on the federal level, the IRS is still trying to determine reliable benchmarks. It's a little challenging to depend on benchmarks that may or may not include the reporting of cash in the entire mix. Now, this issue will never be resolved until the industry has access to banking like every other business in the United States. Never, ever, ever respond to an IRS audit notice without the guidance of a tax professional. You can hire a CPA, an enrolled agent, or an attorney to represent you. So, the big takeaways of this episode are: the IRS is obsessed with violations of 280E, so watch out for that. Hire an accountant familiar with cannabis tax and accounting if you want to stay out of trouble and if you want to maximize your tax deductions. Number 3, the cannabis industry is considered a cash-intensive business by the IRS, which means businesses in this space are high on the IRS's hit list. And finally, the IRS has several different methods of auditing cash-intensive businesses. And I didn't even touch the surface as it relates to all of the other methods that they use. I hope you got some value out of this mini-cast, and please feel free to contact me at Desiree@AndersonAccounting3.com if you need help with any IRS or state tax issue, or if you need to file past or current tax returns. Desiree is spelled Desaree at AndersonAccounting3.com. See you on my next mini-cast.